Hi, I'm David Stein of Money for the Rest of Us. And in this video, I answer the question, should you invest in the Indian stock market? I've invested in India via the iShares India Index ETF since early 2015. It's done fine. It's earned about 7% annualized, makes up 7% of my stock exposure. If you compare that, India makes up roughly 1.3% of the global stock market as measured by the MSCI All Country World Index. Jeffrey Gundlach in 2015 said, invest in India and then ignore your account statement for 25 years. What he meant was India is a promising investment, but it can be volatile. And so we need to have very much a long-term time horizon. Ray Dalio of the hedge fund Bridgewater Associates said, India, of all the countries they've looked at, is the most promising in terms of its economy and what they see going forward. What are some of the promising aspects about India? Well, first off, they're the largest democratic nation in the world. Currently, they're going through an election for the lower house. 900 million people will potentially vote in this election. There are 8,000 candidates vying for 543 seats in the lower house of parliament. When you look at this election, it's held over 39 days. There are millions and millions of poll workers, and they just move these poll booths around the country. This started last month, April 2019, and they won't know the outcome until later in May. That's one promise. They're democratic. The other thing is their labor force is growing. India's poor. If we look at the output per person, what's known as per capita GDP, it's only about $1,900 compared to $8,800 for China. And they both have roughly 1.3 to 1.4 billion in population. When we look at per capita GDP of the overall world, that's around $10,721, and the US is roughly $59,000. So GDP, per capita GDP, India's starting from a smaller base. But more females are entering the workforce, and by 2025, India should have the largest workforce in the world. And when you talk about workforce, that's what produces goods and services. So what's driving the economy, and the India economy has grown at about 6 to 7% per year since 2014. Capital Economics estimates it will be the fastest growing economy in the world over the next 2 decades. And one of the things when it comes to the stock market, it's driven by the income, the dividend yield. So the dividend yield on stocks in India is about 1.3%. But then you have earnings growth. And the faster an economy grows on a per capita basis, the faster earnings grow. And that could lead to higher returns for the Indian stock market. Now, there's some challenges. The Indian stock market is expensive. When we look at the price to earnings ratio of stocks in India, the PE is about 23.9 compared to the average PE of 18. So it's more expensive than average. If we look at overall emerging markets, their PE is around 13. India essentially is a growth stock. It's a growth economy. And so when we look at potentially investing in India, we have to recognize that if it falls short of those promises, given some of the risk that are there, there needs to be more labor and land reform. There's certainly some political risk in terms of their just disagreements with Pakistan, so geopolitical risk. They both have nuclear weapons, and so that's something that's always out there. Inflation is always a risk in terms of an economy and a developing economy. Particularly, there's been some question on how independent will a central bank be in India. But we look at all the options around the world, India does have the most promise despite the risk. So how do you invest in India? I mentioned I invest in INDA. I just held it for 4 years now, but I don't think that's the best option. One of the challenges with that particular ETF, it's very concentrated. So the top 10 stocks make up 52% of the holdings. A more interesting investment is the iShares MSCI India Small Cap ETF. It's much more diversified. It has 262 holdings versus 79 holdings for INDA. And the top 10 holdings only make up about 15% of that ETF. The PE of that particular ETF is around 20, so not as expensive as the overall India stock market, and invest in smaller companies that are growing, will benefit from the growing population and growing worker population in India. So India is an interesting investment. You should consider potentially investing there. Recognize there's an opportunity in terms of the very fast-growing economy, but there's also risk, potentially inflation, just geopolitical risk, and that some of the land reforms and other reforms to make the economy more efficient don't come to pass. Hey, if you have any questions on this video, go ahead and leave those in the comments below. Thanks.